Hello everyone, here are the latest market news on June the 10th, 2020. Oil drops amid huge jump in U.S. inventories. Oil prices dropped on Wednesday amid increasing crude and fuel stockpiles in the United States, which renewed fears about oversupply. Brent crude futures fell 1.6% to $40.51 a barrel after a 1% rise on Tuesday. West Texas Intermediate oil contracts declined 2.1% to $38.14 a barrel, having risen about 2% in the previous session. While oil benchmarks climbed to their highest in 3 months on Monday, some analysts think the market has risen too far and too fast. According to the data from American Petroleum Institute, U.S. oil inventories rose 8.4 million barrels in the week to June 5th, exceeding 1.7 million barrels expectations. Distillate fuel stockpiles, including diesel, fuel, and heating oil, grew 4.3 million barrels, more than analyst estimates for a 3 million barrels increase. U.S. faces criticism for returning Iran sanctions. Russia and China cooperated to make the case at the United Nations against Washington's claim that it can return all sanctions on Iran at the Security Council, with Moscow invoking a 50-year-old international legal opinion to argue against the move. Russian Foreign Minister Sergei Lavrov and the Chinese government's top diplomat Wang Yi appealed to the 15-member council and UN Chief Antonio Guterres as the United States threatens to spark a so-called sanctions snapback under the Iran nuclear deal, even though Washington quit the accords in 2018. The United States argues it can still trigger the sanctions snapback because the 2015 UN resolution still names it as a participant. Diplomats believe Washington would likely face tense disputes. Cathay Pacific rises amid Hong Kong support. Shares of Cathay Pacific Airways (LED) surged as much as 18.7% on Wednesday, reaching their highest level since February 24th, after the carrier announced a 39 billion Hong Kong dollars, $5 billion recapitalization plan led by the Hong Kong government. The rescue package, which includes a 11.7 billion Hong Kong dollars rights issue to existing shareholders led by Swire Pacific and Air China, aims to help the airline to cope with the coronavirus crisis, which the International Air Transport Association estimates will cost the industry a record $84 billion in 2020. Cathay Pacific said it expects to repay the Hong Kong government for 19.5 billion Hong Kong dollars, $2.52 billion of preference shares over a 3 to 5 year period. Vodafone claims Britain needs Huawei for 5G. Vodafone Group plc, the world's second biggest mobile operator, warned that Britain's desire to lead the world in 5G technology will face a big blow as the country decides to remove China's Huawei Technologies co-LTD from its telecoms infrastructure. The development comes as Britain held talks on 5G networking equipment supplies with Japan's NEC Corp and South Korea's Samsung Electronics co-LTD as part of a bid to develop alternatives to Huawei. The UK designated Huawei a high-risk vendor in January, capping its 5G involvement at 35% and excluding it from the data-heavy core of the network. Prime Minister Boris Johnson has come under renewed pressure from Washington and lawmakers in his own party, who say Huawei's equipment could be used by Beijing for spying. Huawei has repeatedly denied the allegations.